Well, you are very welcome to the Petrobras Investor Day at the New York Stock Exchange. Thank you for coming. Now we have the presentation of a film, and after that we will start our presentation. Tudo a apresentação. Well, first and foremost, I'd like to say thank you for recognizing our efforts during this year. Petrobras share price has outperformed all our peers till now. We are in December 4th, 2019. Petrobras share price was #1 among peers. Thank you so much for valuing our efforts. We are implementing, since the very first day of this new management team, we are implementing a transformational agenda. And we decided to take an outside view, not an inside view. Inside view is just to compare ourselves with ourselves. What we have done last year, this year we are going to do a little bit more. It's not our approach. We decided to take an outside view. That's why you are going to see Mind the Gap is how we called our new strategic plan, because we want to be the best company. So the first action to do that is to close the gap in relation to the best oil companies in the world. Our transformation agenda is underpinned by 5 strategic pillars. It's a small number, it's easy to remember, it's easy to implement. First is the maximization of returns on capital employed. We have a strong focus on assets in which we are the natural owner. This means assets in which we can extract the maximum return possible. I give you a very clear example. For instance, Búzios. We spent almost $17 billion in the acquisition of Búzios, of the transfer rights auction in November. Why is that? Because it's a world-class asset. Large reserves, low lifting costs as low as $4 per barrel, low capex costs because we know the field, we already operate there. We are producing about 600,000 barrels of oil equivalent per day. Nobody knows Búzios better than ourselves. So it's a world-class asset. It's the largest offshore field in the world, and we are the natural owners. So it's key to our strategy to focus on those assets. We love world-class assets. There are other assets in our portfolio that we are not the natural owner, because we are not the ones to do the best with that asset. So it's better to sell to others who can do better than ourselves. So we put in place an active program of portfolio management. The second way to maximize return on capital employed is discipline on capital allocation. Both physical and human capital are very scarce. So projects that have to compete on their own merit, on a risk-return base. The second strategic pillar is the reduction of cost of capital. We are in an industry which is highly capital intensive, and Petrobras has till now a very high cost of capital compared to our peers. So we are making a very strong effort to change the game, to reach more reasonable levels of cost of capital. This is through deleveraging, to transparency, increasing transparency, increasing our relationship, improving our relationship with the global financial community, and an active program of liability management in order to replace existing debt by new low-yielding debt with longer maturities. The third pillar is a relentless search for low costs. Again, we are in an industry which has typically cyclical, in which we're exposed to price volatility and as a consequence to cash flow volatility. So the best way to survive in such environment, and given the long-term prospects for oil price, is to have low costs. So we have to be resilient to low cost, low price scenarios. The best protection is not hedging in commodity exchange, it's through cost reduction and maintaining a low cost structure. The fourth pillar is meritocracy, incentivizing people to go for the extra mile. We launched a variable compensation program, the first effective variable compensation program at Petrobras, and we are implementing an EVA system that will start to work from January the 1st next year. In one of its roles is to be the base for compensating people for value creation. It is our goal to create a culture of value. And you can have the best strategy in the world. It has to be supported by cultural transformation. We are making efforts to create this culture of value. Last but not least, we have a strong focus on people, environment, and safety. We are taking care of people's empowerment. At Petrobras, it's very important to give people more responsibility with accountability, to have a very close dialogue with employees. This was key in our recent victories against the pressures of the unions for launching strikes. The dialogue was a very frank dialogue, is always very important. Petrobras has already a very strong safety culture. This was acquired after many years. Petrobras suffered some accidents early this century. People died, there were material losses. Then Petrobras constructed a very strong safety culture, and it's our task to preserve that and even to enhance this culture. And decarbonizing oil production. We have a concern for climate change, and we are launching measures, continue to develop a program to deal with this phenomenon. In 2019, we have several achievements, but I'd like to highlight just a few. First, we managed to obtain a reduction of debt, of gross debt, of 21 billion US dollars. It's not easy to do that in a short period of time. The divestiture of non-core assets achieved a total of $16.4 billion. Our free cash flow in the first 9 months of the year reached $13 billion. And one of the greatest achievements is, as I mentioned before, the acquisition of the Búzios field, the surplus of the transfer rights. For Petrobras, have the monopoly on refining in Brazil. We had 98%, we still have 98% of the country's refining capacity and a monopoly across the board in natural gas. These have made no good to Petrobras. We didn't make money with these two businesses. To be frank with you, last year, in 2018, we have an economic loss of $6.2 billion in the refining business, a loss of $2.2 billion in the natural gas business. It's not good. As a company, it destroyed value. Its monopoly power is one of the best ways to create fat cats, inefficiency, and as a citizen, it's not consistent with democracy, with a free society, because you restrain the freedom to choose. So we decided voluntarily to open the refining market to competition. We are selling 50% of our capacity. That's 100% of 8 refineries. We already got the first non-binding offers for 4 of the refineries. We're going to get one more refinery this week. And for the first 4 refineries, we're in the second stage to receive binding offers. Our plan is to conclude the divestiture of the 8 refineries by 2021. It's not easy because it involves a lot of work in terms of carving out each of the refineries, creating 8 new companies to deliver to the buyers. Natural gas market, we are selling all our distribution and transportation assets. We are reducing by half our purchase in the domestic market, so there will be room for competition in this market. This is good for Petrobras, this is very good for Brazil and for the oil and gas industry. Another achievement of Petrobras during 2019 was the privatization of BR Distribuidora. And why was it so important? Because it's a landmark. It is the first privatization in Brazil, in the economic history in Brazil, through capital markets. And we had a credit rate upgrade by rating agencies. Our goal is to recover the investment grade rating status that Petrobras lost a few years ago. In the area of cost reduction, we are exploiting every opportunity to cut costs. We launched some voluntary dismissal programs. Almost 30,000 people are already enlisted. They are leaving the company. Several other expenses are being cut. Reduction of space, rationalization of space. Petrobras, at the beginning of this year, had 18 offices outside Brazil, one in New York. We already shut down 8. There are 5 to come. We are in the process to close these offices. The Houston office, the beginning of this year, had six floors in an expensive building in Houston. We paid $5.8 million in a lease contract. From December this year, the office was reduced to half of a floor with a lease payment of $300,000 per year. We are minimizing the number of expatriates in each of the offices. So there are many examples that of initiatives to cut costs underway. Some were already done, and most of them will show the results next year. Several of the measures were taken in order to add more agility, flexibility to the decision-making process, starting with the board of directors, the advisory committees to the board of directors, an empowerment of the executive committee, and an empowerment of the leaders of the company. The goal is not to weaken corporate governance. We praise very much corporate governance. Petrobras have very strong corporate governance standards, but there was an exaggeration, a concentration of powers, too much bureaucracy. So we are changing this, taking care of not weakening the corporate governance standards. We announced a new shareholder remuneration policy. By the way, the first policy of Petrobras. In the past, the only policy was to comply with the law. This is not a policy, this is just compliance. And now we have a policy that our CFO, Andrea Almeida, will address. So mind the gap again. As I said, safety is a priority. Active portfolio management is very important. It's so important that the group in charge of portfolio management reports directly to me in order to, as a symbol, that's a priority of the company. Debt reduction and capital discipline, capital allocation discipline, digital transformation is also very important to our company. We understand that Petrobras, and not only Petrobras, but the oil industry is well behind in terms of digital transformation. According to McKinsey, the oil and gas industry is one of the industries that has more to benefit from digital transformation. And we created an office of digital transformation. This is being led by Nicolas Simoni, a specialist with a lot of experience in order to promote, to introduce the digital revolution to Petrobras. And they have several programs involving, including artificial intelligence, to reach significant increase in efficiency and lowering costs. And the transition to a low-carbon economy is also a priority. Well, as key metrics, we'll continue with the total recordable injuries to be less than 1. This year, we reached a level that's below the oil industry benchmark. The numbers of the third quarter show that we reached 0.75. That's below the 0.8, which was the previous benchmark for the oil industry. And I've been informed every day that we are decreasing. So it's very likely that we end this year with a fantastic result in this metric. Net debt EBITDA remains as a target for 1.5 times. That's reasonable for, highly recommended, not reasonable, but highly recommended for a commodity producer, which is exposed to price volatility. This is our goal. And as a consequence of the introduction of the EVA, we have a goal for EVA this in 2020. It's the delta EVA, the increase in EVA of $2.6 billion. According to a study made by McKinsey, over the last 20 years, Petrobras was one of the very few companies that systematically destroyed shareholder value. Our business is to create value. And so we have the goal of improving EVA that we start into 2020, setting a target of $2.6 billion. And our ambition is to have 0 fatalities. It's not tolerable for a responsible company to accept the death of any person in its operations. Unfortunately, this year, we have 2 fatalities in our operations. But we know that it's a very bold and hard target to achieve, but we'll continue to pursue 0 fatalities. And to finalize my presentation, I'll give you a view of Petrobras of the future, not in the long term. We expect what to expect Petrobras to be in 2022. First, Petrobras will be a very focused company on oil and natural gas exploration and production, geographically concentrated in the southeast of Brazil, in 3 states, Espírito Santo, Rio de Janeiro, and São Paulo, with world-class assets, only deep on the ultra-deep waters. We are divesting all the mature fields in onshore and shallow waters. We'll have 5 refineries for the state of São Paulo, 1 in the state of Rio de Janeiro. We are looking to have an efficient and low-cost refining business helped by digital transformation and several changes in process. The company will be supported by enhanced competence in logistics and marketing. Logistics and marketing will become much more important to our company than in the past. Low cost of capital. As I said, we are working on the building of a cultural value. This involves cultural transformation. Petrobras has very strong and very valuable characteristics in its culture, technical excellence, passion for the business, the ability to overcome challenge, very serious challenge, from a moral crisis to the challenge presented by the exploration of the pre-salt, develop a new technology. So it's a very important points of Petrobras culture that we want to preserve and to enhance. On the other hand, some delusions have to be forgotten, and people have to acquire new competence. This will be the core of the building of culture of value. And last but not least, with respect to climate change and renewables, we are not going to invest in solar or wind plants. And why is that? Because we don't have the competence to do that. We are not going to lose money just for the sake of showing people that we are good citizens, that we are champions of sustainability. Losing money makes no good to everybody. And so instead of doing that, we are pursuing the learning of how to manage this business with investments in research and development. This, I believe, this is our view of Petrobras in a couple of years ahead, not in the long term. Well, having said that, now I pass to my colleague, Chief Financial Officer, Andrea Almeida, for her comments.
Good afternoon, everybody. It's a pleasure to be here to tell you a little bit of our plan and our highlights on the financial area. So starting with the finance strategies, we try to be a little boring here. So we tend to do everything that was a success during 2019, and we will keep that, definitely. So maybe starting for maximizing the shareholder return, I think Roberto already covered that very well. We will be focused on higher return assets and world-class assets, and you saw that throughout 2019. And you will see more of us doing that through the divestments and concentrating in E&P. On the debt reduction, and that's, again, we need to keep doing what was good. 2019 was a very good year that we were able to implement lots of good strategies. On the liability management, I believe we will continue to try to get notes out of the market, and definitely we will need to issue maybe new bonds and exchange partially for cash. We know it's hard right now with Petrobras getting a better credit. I know it's hard for the bondholders to decide to leave the bonds, but definitely it's important for us, as this piece is a relevant piece of our debt, we will continue to pursue that. We did very relevant transactions, and the third quarter we talk about them, that were very important to continue reducing reducing the interest rate, the interest burden in our cash flow. One of them was issue of local debentures in the Brazilian market, where we were able to swap them into dollars at a very low average rates of around 3.6 in dollars. That really tells us where is the trend for our interest rates. We wanted to get from the average interest rates of our portfolio of around 6% getting lower to something closer to 5%, and that's the trend we will pursue going forward. You will see, definitely we have a very important payment in the end of the year due to the bids that we participate, that we are very happy. So we will be able to reach the minimum cash that we have been talking a lot, that is the $6.6 billion. Dividend, you will see that finally dividend is a very important part of the uses of the cash that this company will be generating for the future. But definitely, we will leave space to continue investing in world-class assets and in assets that will be able to survive or to have a break-even that is below $50 per barrel, and in the long run, even lower than that, around $45 per barrel. On the contingency management, we have been working hard to reduce the contingency. We know this is another part of our liability in our financial statements. And maybe starting and next year will be very important for that. Maybe starting with our pension plan, we have a very important goal, and we are working on it right now. That is to solve the deficit of $8.8 billion that we have there. And how we are going to get there is to approve a new equalization plan that will balance the contribution of people with the reduction of the future benefits. And one important thing as well for a defined benefit plan, that is to change the fixed contributions of the participants to a variable contribution. So as this imbalance of the definitely contribution plan is going to reduce over time. On that, we have been implementing some agreements around the ICMS tax. We were able to take 5.4 billion reais out of our contingencies, paying 1.4 billion reais. So these were important agreements that we did during the year. And we had some victories on our legal fights in the tax contingency as well. And we expect to finish 2019 with a reduction of 27 billion reais as well in the contingencies related to tax. So we will continue to do that. We know it's an important piece of our financial strategy to address not only the debt, but the contingencies in our balance sheet. Talking about the improvements where we see this plan and why we see this plan is very important for Petrobras is because we do really see upside potential for the company. So Roberto already mentioned, we will continue to focus on the portfolio management, and we have embedded in this plan $20 to $30 billion of asset sales. But this is not enough, actually. We will talk a little more about that. We will have other assets being added to the portfolio of the assets that we want to sell because we wanted to keep and continue the trend of deleveraging. On the cost reduction, and that's really a very important focus, and I think I talked to lots of you guys in the last weeks about having a defined goal for 2020. So finally, we have a defined goal. We have a 10% reductions of costs overall. We have a very strong focus on the corporate center, in the corporate areas, and we have 15% reduction of corporate expenses. In that area, we expect to reduce around $2 billion in the next 2 years. The debt reduction, again, it's something that we have been talking a lot, that our mid to long-term goal is to reach the $60 billion. We will continue to work towards that, and we expect to reach that level around 2021. But there's more to be done. So cash, I already talked about it, and we need to improve because we already have a lot of liquidity cushion with the committed bank facilities, $9 billion. No, we don't really see any liquidity risk for Petrobras nowadays, but we do have a big work to be done in inventory management, so that's going to be a focus moving forward as well. So talking about numbers and cash generation, this company is amazing, the amount of cash that it can generate. So you see $188 billion over the 5 years. And definitely there is the range of the asset sales from the 20 to 30 in that picture. And I think you start to see how dividends become a more relevant piece into the equation of the use of that cash. As I said, we will always keep some money for the good investments, for the ones that are really going to be sustaining us through the long run, even during volatile times. So we have a $76 billion right now, and we'll talk about how the change and what impacted the change of this number from the last plan. And definitely we'll have amortizations for our debt, third-party debt, but we can see how lease starts to be important in this equation of our uses of cash moving forward because we do have lots of our systems based in lease, and we'll have some more coming. Regarding the investment, I know this picture is new. We came from 84 to 75.7, and definitely E&P will continue to be the biggest one using that amount of money, and that makes a lot of sense with our focus on higher return assets. But this time we already introduced the risk management that we did in 2019 and was very successful for us to get to the level of CapEx that we really believe we are going to do. So it's really a realistic 5-year plan. As you can see, we will have maybe higher towers over the years, but those higher towers over the years, they are really related to the surplus of the transfer of rights auction. So you see that we just break the $13 billion investment every year on the years that we are really starting the highest investment in the surplus of the transfer of rights. And maybe talking about breaking down somehow the CapEx as well, we brought the concept of together with the sustaining the basic maintenance, we are adding what we call there is replacement capital together with sustaining. And the idea is whenever we ramp up a system, everything we invest to ramp up a system is going to be growth. New wells that we have to develop over the years after the ramp up, they will be replacement and they will be under sustaining. So that's a concept that Carlos Alberto will go over deeply on the E&P presentation. How we are going to get to the leverage, so definitely we need to divest. It's not only the cash generation that is going to get us to our goal of the 1.5 and to our goal of $60 billion, and we believe in 2021. We already have in this plan all the assets related to the new gas market, as you can see. We have all the refiners that we have been talking about. We have the thermal power plants. We have offshore gas pipelines, South American assets, but we are adding more. So what is not in this plan, so what is not in the numbers, and they will come as soon as we take a look in the portfolio of E&P and find other post-salt assets that we'll be bringing or adding on. So we don't have in this plan those assets that will be E&P portfolio management. Braskem BR distribuidora that we still have 37.5%. Those will be added to those numbers so as we continue the trend of deleveraging. So as I mentioned, finally, dividends will play a more important role in our cash flow. We already announced the dividend policy, so you get the idea that whenever we reach the $60 billion, we'll be paying 60% of the operating cash flow minus CapEx. Here we just wanted to give you maybe more details on what is the debt that we'll be looking for. So we will be looking for the annual debt for us to define the dividend for the year. So we will wait to close the year, the annual, based on the annual closing of the year to pay the dividend according to the new dividend policy. We will pay during the year dividends, or we will announce during the year dividends, and we plan to pay at least twice, maybe based during the year on the minimum dividend, and then we adjust for the new policy at the end of the year whenever we have the total debt released to the market. So all the cash flows in that calculation, they are IFRS 16 related. So CapEx doesn't include leasing. So it's a very important piece, so does not include leasing. So maybe those are the most important highlights, but definitely this will be a trend for the company moving forward, and you'll see dividend as an important piece of our cash flow use. Here is just trends. So as you see, we have the goal, and we'll get there to the $60 billion of that. And we will count on the extra asset sales to get there until 2021. But 2021 will be an important year where we expect to receive the money from the refinery sales. So it will be an important year of getting cash in as well and helping us get there. And dividends, as you see, we have no projection, but definitely you can expect something higher after 2021. Here is another way of looking at costs and E&P. This is only E&P, and we wanted to bring a different picture. And the idea here is that whenever we have a Brent price of $16 per barrel, we will be able to pay all the operating costs, and here we have decommissioning and leasing. The government take, that is the government participation. We take as revenue the gas that we sell in the market. The sustaining here is just the basic maintenance sustaining, and we have a little spread, so it's something that we get as a premium on our oil. So whenever we have a $16 per barrel, we will be able to pay all of that in a cash basis. So we are not considering here the CapEx for new systems, not the growth, not the replacement, but this is like the break-even for the very extreme scenario where we just keep the basic maintenance of the company. So it's an important thing because we keep looking at lifting costs, but lifting costs is just one piece of the first box that you see here. And it's important for us to see how resilient we are building our E&P portfolio. And maybe, again, finishing with the volatility somehow. We know we have a cash flow generation that is a lot volatile. So there is no way we need to, the most important thing we need to do in this company is really to reduce costs, to be lean, and to be working on getting more efficiencies, because we know how volatile our generation of cash is. Just maybe taking one of those scenarios that we put here, if we look how the exchange rate is right now and the Brent price around 60, you might expect us in 2020 to be generating around $35 billion of EBITDA. That could be better, that could be worse, and maybe that's the reason why we have to keep the portfolio focused on world-class assets, higher return assets, lower costs, and preparing Petrobras to be more competitive in the long run. And I pass the words to my friend, Carlos Alberto.
Well, good afternoon. I would like to, in this presentation, this brief presentation, I would like to address some points that I think that they are very important for the exploration and production area of Petrobras. And I'll start with our strategy, our focus on the exploration and production area. And then I'll have a little talk about how we are performing on the production of this year 2019. And also about the target for the production of the year 2020, next year. Then I will proceed with the 5-year production plan, the profile for our production, what we think is going to happen, and the new production system that we are going to put on stream in the next 5 years. Also, I think that's one point that's very important is also that I could mention about what is our lifting cost today and what we predicted to be in the future, and also about the portfolio break-even, the prospective break-even today after we have done a lot of investments. And then following some words about what are the exploratory assets that we have today inside our portfolio after taking part in a lot of bids that took place in Brazil in the last 2 to 3 years. Some words about the Búzios field, which is very important asset in our portfolio. And then finalizing with the revitalization of the Campos Basin, and also some words about the decommissioning of some offshore systems that we have in Brazil, particularly in the Campos Basin. Regarding the E&P strategy, what we see is that we are going to focusing more and more in deep and ultra-deep waters, where we are the natural owners, and we are going to be less and less, we have less and less share until finishing our participation on the onshore assets in shallow waters as well. Our intention is to growth based on world-class assets, like the Búzios field and others, like the Lula field and also Libra field. And at the same time, we want to increase our operational efficiency, the recovery factor, which is something that's very important in order to generate value for the exploration and production. What we see is that almost 100% of our investment, when we look at this figure, this chart, is that almost 100% will be invested in on the pre-salt and also in deep water and ultra-deep waters. And when we look at the fraction that we are going to invest on the onshore, if we split the 5% that is shown here, it's in onshore and research and development, 2.5% could be, we could split in 2.5% on the onshore and 2.5% for this research and development, which means that 97.5% will be invested on the deep water, on the ultra-deep water, on the pre-salt, which means that for sure it makes sense when we see that we are when you say that we are going to focus our attention on the deep and ultra-deep waters. And when we look at this chart, it makes a lot of sense. And we also invest 73% of our investments on the growth of the production, which means that we are going to invest in the systems that enter on stream in 2018. It means that we have some systems that we are going to put on stream the next years, but at the same time, we have some wells that they are going to ramp up the production of platforms that enter into 2018. And so in this count is the 73% that relates to the growth of what you call the growth. And when we look at the sustaining side, $10 billion will be invested in some wells of the systems that are older than 2018 that we have entered, like the systems in the Campos Basin, and $7 billion is for stoppage and also infrastructure. By infrastructure, I mean the maintenance of the older systems, and not infrastructure, because when we look at this, we could think that infrastructure is something regarding pipelines of gas or other things that we evacuate our production, and that's not the case. Making a stop here to see what is our 2019 prediction. We have increased it a lot during the 2019. We suffered, we faced some problems related to the compression of gas in the new systems of Búzios, but then we changed our level from the 2.7 million barrels of oil equivalent per day of the first semester to something closer to 2.9 and 3 million barrels of oil equivalent per day. In fact, at the beginning of November, we have successive records, and at the beginning of November, we have a new record of daily production of 3.2 million barrels of oil equivalent per day. And we have just closed the November, and we have a production that is higher than the 3 million barrels of oil equivalent per day. Maybe we don't know the figure yet. We are just closing it. We have the systems that have to close because we have production that comes from other operators, especially abroad. And but we think that maybe we could reach, that's a possibility, a new record of 3.1, and I'm talking about a monthly production record. So at the end of the year, we are going to close in this level. It's our expectation for the year. And our target was 2.7 million barrels of oil equivalent per day. And the annual projected in average will be close to it, maybe a little bit more. We are thinking that will be above 2.75 as the annual projected on the average. When you look at the 2020 prediction, if we do not consider the divestments that we are going to make and close this year, because we have the divestment of the Tartaruga Verde field and also the assets that we have in Nigeria, they represent something like 100,000 barrels of oil equivalent per day. So as we close the end with a figure like 3.1 million barrels of oil equivalent per day in December, when we start the year, we will already start with a figure of 3.0 million barrels of oil equivalent per day. And so we have to discount what is the decline of the year. And also one thing that we are going to make in the first semester of next year, which is to have a big stoppage of all platforms that we have, because we want them to get to be in another level of reliability, integrity, and safety. And we are going to stop all platforms of Búzios, all platforms of Lula, all platforms of the Campos Basin. For sure, we are not going to do it together, but on the first semester of the year, the next year, we are going to do this. We are going to stop them in a stoppage between 15 days to 20 days each one. So we will have something that we will present in the next year, which is we are calling the reliability, integrity, and safety of almost 200,000 barrels per day. But that's something that will be good, that will put us in another level of efficiency, not only for the 2020, but also for the years to come. And so the target for the years it will be the same targets that we have this year, but we have to consider that we are going to divest in the Tartaruga field and also in the Nigerian fields, as I mentioned. So although we have this divestment to close, we are keeping the same target as we had last year. And when we look ahead of us, from the 2020 to the 2024, what I see is that we will have an increase in the production. We have always to consider that we will have decline from those fields, but at the same time, we will have an increase in the production, a ramp up, or new systems to come, and we are going to increase the production of our production by 200,000 barrels of oil equivalent per day in each year. We have also to consider that this profile do not consider divestments that maybe we are going to close at the years to come, because we are in this process of managing our portfolio. We are going to divest on the onshore. Maybe we are going to divest in more assets of the Campos Basin and making some partnerships. So this figure does not, this profile, the chart, does not consider the divestments that we are considering to have in the future. And this increase in the production is based on not only on the wells that we are going to produce, and the wells that we are going to produce and to put them on stream in the older systems, like in the Campos Basin, but also from those systems, from those 13 new production systems that are on the bottom line of this slide. I should explain this chart. When you look at the right, you see an oil production, a commercial production, and a total production. That's something new that we are presenting. We were always talking about the total production, I mean oil production and gas that we produce. But we want now to present a new concept, which is the commercial production, which is the oil production, and in that we add the gas that will go to the market. So we are calling this the commercial production. And another thing that I hadn't mentioned before, but the 2.7 million barrels of oil equivalent per day, we are still keeping a range of this production that is the same 2.5%, which means that it could be higher, it could be lower. It will depend on the performance that we'll have at the year. And for the years to come, we choose not to comment on this range and wait until we approach each year and then say what is our best evaluation about the range for each year in terms of production. We are going to increase the pre-salt. It will take more and more share on our portfolio, for sure. We see that we are going to increase from 63% of participation to 66% of participation in the year 2024. And when you look at this figure at the left side of the slide, the first thing may be that we think is that it has a very low increase. But in fact, the 63% is related to the production of 2.7 million barrels of oil equivalent per day, and the 66% is related to a production of 3.5 million barrels of oil equivalent per day. So there is an increase on the pre-salt production of 600,000 barrels of oil equivalent per day, in fact. So it's a very huge increase on the production. And on the right side, we see that now, and from now on, that's one thing that we are going to see more and more. We are going to have a new regulatory regime. In this chart, we see the effect of the Libra field that has this kind of contract, the production sharing contract, and we are going to see more and more the presence of the production sharing contract on the total of our production. Looking at our lifting costs and the break-even of our portfolio, we see that it's completely understood. We have to understand, and it's very well understood, that the pre-salt makes a lot of sense, and that's the reason to invest on the pre-salt and to produce the pre-salt is the same reason that is able to reduce our lifting costs as a whole and also to reduce the prospective break-even of our portfolio. When you look at this figure, we decided to share the operational lifting costs. What is when we look at the side is in the green area regarding the pre-salt, and also we have the leasing that is on the top of each column. That relates to one decision that we have made in the past, that was to lease the platform instead of buying the platform, instead of having the platform as our own one of our assets of Petrobras. So we decided to split it because, in fact, we have to compare ourselves, and we have to compare ourselves with other companies. That's the concept of the mind the gap. So, and to compare ourselves to other companies, we have just to get what is the real efficiency that we have. And we are going to have this figure of to be under $4 per barrel on the pre-salt when it comes to the lifting costs, and to be around the $6 per barrel when it comes to the E&P as a whole. Regarding the exploratory efforts that we have made in the past, what we see is that when we suffer from the fact that the oil prices go down to a lower oil price scenario, we have to reduce our investment in exploration. I think that every company all around the world, companies from E&P, have done the same, and we are not different, and we have to adjust ourselves. And in fact, in the past, in the 2013 and 2014, we invested something like $4 to $5 billion in exploration. And then when the oil price come down, we have to reduce our investments in exploration. That's something that we started to be concerned about what will be the future of the company. And the reason, and we have reduced the investment in exploration, but taking part on the bids that took place, the bids of ANP in Brazil that took place from the 2017 to 2019, it was very important to Petrobras. We were very selective, but we bought very important assets that will make the difference for us in the future. And particularly on the 2019, we bought the Búzios field, which is a very important asset on the portfolio of Petrobras. For the Búzios field and the regime of now, that is the transfer of rights surplus, we bought it for a bonus that in the total was something like $17 billion. But that's a field that makes all sense to buy it for this amount of money. Because what we see is that Búzios is the biggest offshore oil fields and deep waters all around the world. There is no doubt about it. And what we see is that we have today 4 platforms that are already on stream, and they are producing almost 600,000 barrels of oil equivalent per day. We are going to begin operation in 2022 in another platform, which is the Búzios 5. And what we see is that the field has a potential to add 7 additional platforms on the field as a whole. So you are going to produce the field with 12 units, and those 7 new units, they will have higher capacity than the units that we have already installed or that are already on operation. So the units that are already installed or the new unit that will be in operation in the year 2022, they have a capacity of 150,000 barrels per day. And the new units will have a minimum capacity, as we see today, of 180,000 barrels of oil per day. So we can say that on the Búzios field, we could think about a figure of 80 to 10 billion barrels of oil equivalent that we can put then on stream. That will be in the future, maybe will be the reserves of the company. They are not now, but there is a potential to be reserves in the for the company in the future. Recovering the campus-based output is also another very important thing that we are implementing a lot of efforts and initiatives in order to again go back to the prediction that we have had on the 2019 this year. And we have produced something like 1 million barrels of oil equivalent per day at the campus basin this year. We are going to produce it as the mid of the average prediction of the year. And we want to have the same prediction when it comes to the 2014. Although the divestment that we have made at the Tartaruga field, that will close at this year, the 2019, which represents something like 60,000 barrels of oil equivalent per day. Although this divestment, we want, for sure this profile does not show any other divestment that may happen in the future, but we want to have the same prediction the year 2014 that we have had this year, the 2019. And so, what we are going to do to increase the operational efficiency of the platforms, it has to do with the stoppage that we are going to do this first semester of the 2020, complementary projects, revitalization of projects. In the Marlin field, for instance, we are going to take out 9 platforms and to put on stream 2 new ones. New areas that we have acquired and on the basis of 2017-2019 that we are going to start the investment, exploratory investments, and that will keep the production alive in the years after the 2014. Extensions and new findings, well, for sure that's something that we have to work with the E&P. And also about technology that we are implementing, and the strategic partnership, just to end the initiatives of this slide, that it has to do with the partnership that we have made with Equinor, and where we are going to implement some projects at the year 2001, and we have to finalize all of them in the next year. And finally, ending my presentation, just the slide to show that that's one thing that is new for us. That's something that we are going to do in the near future, that is considered in our plan, which is the decommissioning of our offshore system, older systems. At the year 2020, we have some systems at the campus basin, the south of campus basin, which are the platforms that are by their name here. And then we have another names here like the P33, 26, 32, 37, P18, 19, 20, 25. They are all the systems of the Marlin field, the system that we have to decommission then and to put 2 new platforms which are calling the revitalization of those fields. But that's one thing that's very important. We have considered it in our investment plan because that's something that we have to do. But it's also important that we have created a specific area inside the exploration prediction area just to deal with that. Thank you. I'll pass the word to my colleague, Andres Lara.
Good afternoon. It's a pleasure to be here, and I would like to talk about our downstream area, including refining, gas, and power segments. Our main strategies in these areas are to increase competitiveness in the refining market in Brazil with focus on Southeast operations. We have today 13 refineries split all over the country, and after the divestment program, we will keep only 5 refineries located in São Paulo and Rio de Janeiro states. This divestment process will push us to be even more competitive and aggressive in the global oil and gas trading, including not only the increase of oil crude to export, but oil to have more sustainable oil products to export. Another issue is to divest the gas distribution and transportation segment. As Roberto and Andrea already talked, we have to divest 100% of our gas transportation pipelines and our distribution company. So we will keep only the gas production and commercialization areas. We have also in our portfolio 26 thermal plants in Brazil. We think that this is a kind of asset that has a hidden value that we want to disclosure. And our idea is to keep the most efficient and high-performance ones to build and to create a new company and to IPO this company. And at least we want also to work on new and more sustainable oil products like renewable diesel and biojet that could be also sent to the market, but I will talk about that in the next slide. Downstream capex is much more lower than my friend in the upstream segment. It's only $8 billion, $6 billion in refining and $2 billion in gas and power. And the main focus of these investments is to assure asset integrity and maintenance. But we have also some investments in new projects to increase efficiency and conversion capacity of the refineries that will stay in our park, like hydrotreatment in Replan, Reduc, and RPPC to increase the production of diesel with low sulfur, 10 ppm S10, and also to the hydrocracking in Reduc to produce high-quality lubricants. In the gas segment, we aim to complete the pre-salt gas route 3 and the gas processing plant in Comperj that will allow us to increase our gas production by 21 million cubic meters per day. The operation is scheduled to start during the second semester of 2021. We have also some research investments in solar plants and also wind offshore. Concerning the adding competition to upstream, nowadays Petrobras is responsible for 98% of the refining market in Brazil. The divestment of our refining market will be a step change in the oil and gas industry in Brazil. 8 refineries will be divested, 1 in the north, 3 in the northeast, 1 in the southeast, and 3 in the south. The first 4 refineries, Reneste, Relan, Repar, and Refap, are already in bidding phase, and we expect to receive the final offers until the end of the first quarter of 2020. The other 4, Reman, Lubinor, Regap, and 6, are in the non-binding phase, and we expect to receive the non-binding proposal during December and January. As I said, we will keep 5 refineries in Southeast, close to our most prolific production fields, inside the most developed region of the country. Our benchmarking performance is Replan. This refinery is located in São Paulo state, and Replan has a capacity to process 430,000 barrels of oil per day, with a returning capital around 15% and a net margin around 13%. According to Solomon's benchmarking, Replan performance is the first quartile of Latin America, and we still have some gaps to close regarding the benchmark with U.S. refineries. Concerning our benchmark with U.S. refiners, we are better in maintenance costs, but in efficiency cost and energy cost, we still have some work to do. The natural gas segment is also under a huge transformation in Petrobras and in Brazil. We used to have the monopoly of all activities of the gas value chain in Brazil. And 3 years ago, we began this opening by selling 90% of our gas transportation pipeline in Southeast to Brookfield Consortium. This year, we sold 19% of TAG to ENGIE and CDPQ, and we committed with the antitrust authority to leave 100% of the gas transportation and distribution company by next year. After completing this movement, we will keep around 50% of the gas value chain in Brazil. Our partners in pre-salt fields and other gas producers in the country will be able to commercialize their own gas. Today, Brazil is still a gas importer, and we believe that this situation will continue until the second half of the next decade. We import around 25 to 35 million cubic meters of gas per day from Bolivia, as you know, and also from LNG. Petrobras' efforts toward a more sustainable future focus also on research and development of new oil products with a lower carbon footprint. We are talking about renewable and biojet fuel, renewable diesel and biojet fuel produced by co-processing vegetable oil in our refining park. This process showed to be very effective and stable, and we need the approval of the regulatory agency in order to use this project to get biofuel credits. As you know, today, the distribution companies in Brazil, they must add 11% of biodiesel to the refining diesel. And this percentage will increase 1% per year until 2023. It means achieving 15% of the biodiesel in diesel. Concerning IMO 2020, we are very well positioned. Our pre-salt oil is low sulfur, and our refineries are able to produce bunker 0.5% without the necessity to add any other component. We forecast an additional gain of $1 billion in 2020 compared to 2018. We estimated that in 2020, we are going to produce around 900 tons of bunker to export to other countries. And also, our crude oil export is increasing to reach almost 600 barrels of oil per day, and being more valuable in the global market trading due to its characteristics, as I said, with the low sulfur content. We forecast an additional gain on $500 million in 2020 compared to 2018. And finally, Petrobras' contribution to reduce the impact of the oil and gas industry in the climate change is mandatory. Our roadmap to reduce carbon footprint is focused on the following process: closed flare deployment to achieve no gas flaring in our installations, CO2 capture and storage, including CO2 reinjection of all CO2 produced in the pre-salt fields, and also CO2 subsea separation that is still in our R&D project. Intensive work to monitor leakage and repair to reduce hydrocarbon loss in our assets, vapor tank recovery, energy efficiency growth. An important milestone in this area will be the application of supercritical CO2 turbines. And finally, R&D projects in offshore wind and clear energy. We have an agreement with Equinor in order to develop together wind offshore in Brazil. The CAPEX involved in this process include R&D projects is estimated in 107 million per year, considering this our 5-year plan. Now, my colleague Nico.
Hello, good afternoon. First of all, it's a pleasure to be here to speak about the digital transformation and innovation in the agenda of a company like Petrobras, because like my colleagues show, we have a lot of opportunities, we have a lot of ambitions also to run through this 2024 strategic plan. But the most important is that we are, if you see in all the presentations, the results of the ambition of digital transformation, like add value or with an add value purpose, are there. And when we think in a digital transformation area or an innovation also, the area is just an enable in order to implement and to accelerate technologies and achieve and add value for a company. With this, I mean that our strategy is to accelerate Petrobras to this digital transformation and innovation journey that starts, today, but we need to accelerate this in a higher speed to achieve and increase our KPIs in the future. And when we think in the strategy of digital transformation and innovation, I split it in some concepts in order to be aligned here. First of all is the dimension of Go Digital. What means with Go Digital is about technology, information technology, that are digital platforms with like enterprise architectural that we are going to put together in order to accelerate and be more horizontal in the technology decisions that we take in the company. But what we have in the Go Digital strategy, we can buy technology from the market. I think the challenge is the dimension that we need to be digital, that is the second bullet that there. That is the digital transformation itself. When we think in an organization that go for this movement, we are thinking in a agile at the scale implementation is a new way of working, is a new mindset that we need to implement in the company, and is a cultural change also that all my colleagues here are aligned, and we are pushing to the company. When we think in a company, that means that we need to implement a new ways of working like agile at the scale. We are thinking about 1,000 to 1,500 teams working together in an agile methodology. That means that we need to orchestrate very well how we are going to put this team working together in a collaborative way and in a co-working perspective. When we think about digital transformation, I think in 3 dimensions that are very important, that is process, people, and technology. With the 2 dimensions that I explained before, we are speaking about technology, but we need to think in processes also. I think in Petrobras we have huge opportunities to work in a lean process scalability. That means that we need to simplify and unbureaucratize the process in Petrobras, like Roberto highlighted before. I think it's important to be more lean. And in this case, what we are thinking is about re-engineering process, implement platforms that will allow us to have the process more digitalized and do more robotization of the processes that I think will create, and we believe we create efficiency through the company itself. And when we think in different technologies, like for example, SAP, that we will have a project that will be S4HANA, we have the opportunities with this movement to do a re-engineering of a huge part of the process in Petrobras. When we think about innovation, for example, that is our R&D center, what we want is to, of course, work in the core business. I will explain in a few more slides, but also accelerate the time to market of the innovation that we are working. Just not stay in pilot, but also thinking in business model that will allow us to add more value in the company. R&D or innovation is already in the DNA of Petrobras since the beginning. What we want is to accelerate this field of innovation in order to accelerate the creation of value. When we think about in protection, that is information and cybersecurity, of course, if we think or if we have an agenda of digital transformation, it's important to think in cybersecurity. But the most important thing in part of, okay, we need to do the day-by-day operation in the cybersecurity, is put cybersecurity as an innovation enabler. It's just not freeze a company, but just push the company with a protection that we believe the next years we will have a lot of challenge in what means in information security or cybersecurity. And I think in our agenda is a top priority also to maintain this grade of maturity. When we think in technology, and I put some examples of project or technology that we are thinking about, like blockchain, for example, to finance and also with the logistics, for example. We are thinking about a digital twin. Digital twin, of course, for example, in refineries, we have our analogic refinery or our refinery, but also we have the digital twin that allowed us to connect, to rethink the variables and be more efficient. We did a pilot in a replant refinery during this year, and in 3 months, we saw a business case of $25 million positive in just one refinery doing digital twin. That means that when we prospect and we do the rollout, we expect, for example, to have a positive business case of about $800 million of efficiency. What is the message that I want to pass? It's not technology by technology itself. It's just not technology when we think in digital transformation. It's how we put the technology to add value. And I think this is the most important thing and the message that I'm passing here. And another message is, when we think in technology, I believe that today, for digital transformation itself, we don't have a technology limitation. What we need is to have or to build this alchemy of technologies in order to add value, to solve a problem, or to put the need of the business first. When we think in high-performance computing, that I will explain a little bit, is just a technology to accelerate the decision-making that we are running for. And we are thinking also, we are creating this digital ecosystem that is the adds of different technologies and methodologies in order to accelerate this digital transformation and innovation in Petrobras. For example, here, I'm giving one example of use of HPC, that is high-performance computing in Petrobras, that we are increasing in 10 times our capacity from 2019 to 2020. But in order also to increase the simulations, the speed of simulations by decreasing the time that we can take decisions with all the data that we have. Of course, in Petrobras, we have a lot of data, and the challenge with high computing performance is to transform this data in information in order to take decisions. I think this is all the dimensions that we are running for. When we think, for example, and to put more in realistic, but the ambitions that we have here, for example, for E&P, we have one ambition that X100, that means that with high computing performance and digital simulation, what we have is, what we want is 100% discovery chance factor with non-exploratory wells. That means that we don't want more dry exploratory wells. This is a challenge, this is an ambition, but this is possible. I think with the technology that we have today, the intelligence and artificial technology also, and all the tools and platforms that we have, we can achieve or we can deliver this kind of ambition. Another ambition that we have is what we call Prod 1000, that is from the discovery to the first oil, to have 1,000 days to start the first oil taking. That means that today, if we see our average, we are speaking about in 3,000 days of average from the exploration until we get the first oil. We have good cases also internally that we have 1,600 days in some cases. The average market, we are speaking about 1,900, 2,000 days. But I think we have huge opportunities in this field that if we accelerate the first oil initiative, we can add a lot of value to Petrobras. Of course, it's a challenge. If you see the previous slide that we have the digital twin of a refinery, we are speaking here that we will have a digital twin of the rocks with the oils. That means that with high performance computing and artificial intelligence, we can mix all together, working together with this alchemy of technologies and new methodologies in order to realize and to put in place all these ambitions that we have. I'm just giving two examples to be more tangible what we are speaking here about digital transformation and innovation. Of course, it's a journey, but we need to accelerate in this kind of path. The other point that I would like to show to you that we have one of the, I think, is the great assets that we have in Petrobras. That is our SEMPIS or R&D infrastructure. If you see, we have 300,000 square meters in labs, in 147 labs, more than 8,000 equipments. We have great people, great professionals working there, like, for example, 12 postdoctors, we have 261 PhD, we have 420 master science. That means that we have the platform, we have the assets to accelerate and to put in the path this digital transformation and innovation. And I think, like Petrobras, we are very proud. We have the largest R&D center in Latin America. That means that this huge lab of the labs that I call, because we have a lot of labs in one ecosystem that allowed us to add value to the company, is combining all together to do and to run with this acceleration. And one thing, and I want to show to you, that inside our R&D center, we are creating what we call the corporate lab or corporate innovation lab, because, for example, like Andrea told here or highlight here, we have a lot of ambition in order to do more, to be more efficient, to reduce cost, to do more with less. And in this case, we are creating the ecosystem that we are going to put the startups. We are doing partnerships with strategic companies in order to accelerate also our corporate environment. That means, for example, finance, means HR, means IT also. Our area has to be digitalized. And we have a lot of opportunities to do this acceleration with partners like startups to put all together. And for that, in this ecosystem, we need to give or to create an environment that we can give data access, we can have platforms to do some testing. We are creating a co-working space in order to make this transformation with 20 hands, also with the business. And I think the message here also is what we want is to eliminate the frontiers between technology and the business. I think when we think in Industry 4.0, Logistic 4.0, even IT 4.0, the message is let's eliminate these frontiers, these barriers, and work together in order to add value in a company. That, of course, the technology is just a medium, is a way of we can achieve this. And with all this and all this strategy, we believe that we have quick wins, but also that we can put in a high-speed perspective the digital transformation and innovation in the company. Okay, I think I will pass the floor to Roberto to some final remarks. Thank you very much for your attention.
Just our concluding remarks. First, to present our strong commitment to sustainability. It involves significant reduction in greenhouse gas emissions, in the upstream and downstream, the continuation of a focus on carbon capture, the elimination of residues generation, a biodiversity action plan with 100% of Petrobras facilities, and the continuation of investment in environmental and social projects. In social projects, this year, Petrobras adopted a focus on preschool human capital. This is very important for giving poor children opportunities in the future to be successful in their lives. Empirical and theoretical and empirical evidence support what we are saying. Preschool is very important to the formation of good citizens. Just for finalize our presentation for today, I'd like to emphasize that despite the achievements of this year, despite all the initiatives that are underway in our company, we still face many challenges. It will need the hard work of a talented team, a united team, in order to win. So I can assure you that our best days are still well ahead of us. So thank you for coming. Now we are open to your questions and comments. Thank you.
Thank you. André Hachem from Itaú BBA. I have two questions relating mostly to production. My first question is in regards to that ramp-up. You put on slide 27, you show approximately 100,000 barrels of ramp-up coming through over 2020. When we look into the new units in the Búzios field, we see there's a lot more, let's say, upside potential, or that the units are running at much lower rates. So could you explain why only 100,000 in ramp-up? My second question is relating to the stoppages you mentioned in 2020. Some of the units you said would be stopped, including the Búzios fields, are quite new. So why are these stoppages happening right now? And basically, what is the rationale for them? Thank you.
Well, regarding the first question about the prediction and the second one about the stoppage, I think that I'll start with the second one. We have faced a lot of problems at the Búzios field, and in fact with the platforms of the Búzios field. But what we see is that for sure we have passed through those problems. We are not facing those problems anymore. And the stoppage that we are going to make in this year has nothing to do with the problems that we faced this year. And in fact, what we want to do is that it's like a first revision. When we buy a car, for instance, we have to check up everything. And so we are going to spend 15 to 20 days. That's something that we would do at the end of the year 2020, maybe at the end of 2021. But we decided to do it right now because we think that doing this right now, we are going to go to another level of efficiency at the Búzios field. And regarding the first question, could you say it again, because the sound is not very good?
So basically in the presentation, you put 100,000 barrels of production increase in 2020 owing to the new ramp-ups, right? When we look into the current units that are already on field, we see a lot more potential. They're running at much lower utilization rates. So what we wanted to understand is basically why it's only 100,000. We see at least, for example, in Búzios, under 250,000 barrels in potential increase, assuming the units would run up to 95% rates.
Oh, in the future, you mean?
Yes. Basically, the new units that are already in place, they should reach around 90% utilization rates, right, or capacity usage. So that's what we wanted to understand.
Despite the achievements of this,
I think the sound is not very good, and in fact, let me, if you understand. I said something about the Búzios field because the Búzios has a lot of potential, but the platforms that are going to be on stream in the next phase of the Búzios field, they will only enter on stream at the year 2014, like that. So I don't know if it's what you
I'll try one, sorry.
Could you approach a little bit of that? Because it's a problem of the sound, there is an echo and I'm not listening to you.
My question is, you put this year another 7 units on stream, right, over the past 2 years. These units are still running at very low rates, right? On the presentation, you showed 100,000 barrels of increase in production via ramp-up. Our question is, why is that so? Why is it only 100,000? If we look into the new units, it should probably be a little bit higher, right? So do you expect these new units to take a lot longer to ramp up? Or are they going to run at lower rates?
No, that's because the next year we are going to have one platform, which will be the P70. And next year we have to increase the production of the P68 that has entered on stream last November. And so we have the ramp up of the P68, and we also have the production and the ramp up of the P70, which is different from the ramp up that we had this year. So it will be a lower ramp up next year. So the ramp up will not compensate the decline of production, which is also high, and we always have decline of production. So it will not be enough to compensate the decline of production next year. That's why, because we will just have 2 platforms. Now at the Búzios field, the production is, in terms of oil, we are almost reaching the 600,000 barrels per day of oil. At the P75, for instance, we are producing 170,000 barrels per day, although the capacity of the platform is 150. We found a way of adjusting the processing plant in order to produce more. The same is happening with the P74, where we are producing 160,000 barrels, although the capacity is the same of 150,000 barrels per day. So we are almost approaching the 600,000 barrels per day on the 4 Búzios units. But after that, we will go to a phase of a plateau, and we are we are going to put on stream other wells when the production declines, and it will happen in 2022, 2023. So the increase in the production regarding the ramp-up of new systems will only be focused on the P68 and the P70. But we also have some wells that we are going to put on stream, but they are related to two older systems that we have at the Campos Basin.
Okay, thank you.
This here. Luis Carvalho from UBS, here, Roberto. Yeah. Well, first of all, thanks very much for the level of details that you provided in the presentation. We're really glad. I think that we're going to spend lots of time discussing the numbers and after digesting that, but I would like to keep it a bit more strategic level. So thinking about the dividends, you mentioned about $34 billion in 5 years, and that's probably going to happen after, as you mentioned, when you reach the $60 billion gross debt, right? So that points to a very high dividend yield, close to 7 to 8%, which is, I mean, for an oil company, seems very, impressive numbers. So how should we think in terms of the recurrence of these numbers looking, over the next 5 years? And how can we think in terms of the difference between the ordinaries and the preferential shares? The second question, and I think that we spoke this about Andrea last week in terms of the analogy that we have been using in terms of the iceberg, right? I mean, what are the impact from all the divestments that you're pursuing? So how can we think about this when you look to the plan? All these impacts from the potential lower EBITDA as well, it's already considered in your numbers, or still, there will be some definitions along the course? Thank you very much.
Our best days are still well
It is on?
ahead of us.
Yes. Okay. So on the dividend policy, if I understood your question, yes, after we reach the $60 billion of that, definitely that will be a substantial dividend payment that is somehow in line what we see on our peer groups. But definitely, that's why we kept the CapEx as a discount, because we believe a dividend policy should be a dividend policy that is stable over time, but that we leave space for the good investments. So what we really want to do is to have the ability to have the CapEx that will be sustaining our future and definitely able to survive over low price scenarios. So yes, we know it's higher, and that's why we see a bigger portion of the dividends. The second question was regarding the asset sales and... Okay, ONs and PNs, we need the 50 billion reais to pay equally to ONs and PNs. We will always try to pay equally for them. So this is whenever possible, we will, but we need 50 billion reais to reach this level for both of them, and definitely we will fight for that, but we do have, and you all know, that in the end of the year, not only in the end of the year, but we have some provisions from the past, from everything that happened in the past that might affect the results, and that is during the year. Not just the contingencies, but definitely some legal proceedings we have. So, and then we will need the income to be around 15 billion reais to be able to pay equally for both. Okay, divestments, what we have in that, so again, why we put a range of $20 to $30 billion of divestment in this plan is because we really don't know 100% how much will be the sale of assets like for the refineries. And that's why we say that we really need more assets to be sold so as we keep the trend of the leveraging. So Carlos Alberto is helping us because he's looking right now into the E&P portfolio of assets to define which are the ones, and not Búzios, to be 100% transparent. We don't want to sell Búzios. It's one of the best in our portfolio. But we will be looking at other assets like Marlin that we might be selling a portion of that because we will need that to continue the deleveraging. So in the plan, we just have a portion of that, and that will depend on the final prices of the bids, and we will be adding, or we wouldn't be able to get to the 1.5 net debt to EBITDA next year. I hope I am.
Thank you. Christian Audi with Santander. The first question on return on capital employed. You made an adjustment in this plan in terms of pursuing EVA versus a return on capital employed as a target. Could you talk a little bit about how we should reconcile your previous target, which was a ROCE of 11% for the plan, taking this new EVA approach? In other words, should we think that that ROCE target of 11% will be maintained, or could it actually be higher than that? Because I noticed in your slide 14 that you have a ROCE for 2021 of around 10%, but it's probably going to be higher than that given that you're selling low return assets, cutting costs, and therefore the ROCE should be higher. So if you could talk about that. And then the second question has to do with sustainable CapEx. I noticed that in your 2024 number, you're using 15 billion. Is that the new, if you will, sustainable CapEx for Petrobras on the back of the acquisition of Búzios and the transfer of rights? Thanks.
So, first question, it's around, sorry, I clean my mind. It's around the... Okay, well, yes, perfect. So we still fight to get a higher return over the capital employed. So again, it's nothing that we left behind. We just decided to move into an EVA because we believe EVA is not only a measure, but it's a managerial system where everybody can see whenever they're doing something in the platform, if they are doing maintenance more efficiently, or my team, if they're efficiently running the cash balance, they will see the impact of in the end, in the value of the company. So why move from one to another is because one brings and helps on the empowerment of people and helps get the strategy up to the lower level in the plans. I think it's a better way to get everybody engaged in this transformation. So that's the only reason why we will continue to pursue the higher return, and that's why we are selling. We are still focusing a lot on divestments and selling the assets that are not giving us a higher return, and investing in more assets that have higher return. And you see in the picture only 2 years, so we continue to fight for higher return on assets. I believe Roberto would like
Christian,
to say.
I would like to add that in addition to EVA being a managerial system, being much more than a simple metric, EVA looks at the two important variables of the equation, return on capital employed and the cost of capital. When you focus only on return on capital employment, you have a partial look of the scenario, so you can make serious mistakes, like starving a star and feeding an underdog. If you want to say, oh, I have a project that brings me a 9% return on capital employment, and our average return on capital employment is 7%. Okay, yes, let's go for it. But your cost of capital is 10%. You are destroying value. And if you have, on the other hand, if you have a project that gives you 12%, but your average return on capital employed is 14%, no, I'm not to invest in this project. You're wrong again, because your return on capital employed is higher than the cost of capital. These are distortions created by looking only to return on capital employed. So EVA is much better than that.
Thanks, Roberto. And maybe talking about the breakdown of sustaining and growth, I think that was the question. I believe it's a good picture, the 35-69, because actually we have in this plan already a big portion of the transfer of right access investments that is going to come. So I believe this might be the new trend. It is the trend for the next 5 years. I cannot say if it is the trend forever, because everything changes over time, but it's a good measure if you want to see the next years, including the access of the transfer of right here, investment as well.
If you wish. Okay, thank you for the feedback.
Thank you. Regis from Credit Suisse. Thanks for the presentation. I mean, great job. Lots of detail. It really helps in the transparency front, I guess. Three topics I wanted to discuss very briefly, I promise. First one is cost savings, then production and CapEx. And just to detail a little bit more, cost savings. Plan says 10% cost reduction. How do we track those returns, those savings? And then whether the EBITDA estimates you had in presentation already include any or how much cost savings. And then on production, for me too, I expected a higher number for the next year, given the ramp up of the platforms of the past 2 years. So maybe the explanation is there any production laws related to the TOR unitization, or do you, on the other hand, decline seem pretty high? Is it because you expect pre-salt fields to start declining more materially? So just trying to understand a bit, trying to reconcile the production curve. And then just finally on CapEx, I wanted to understand whether decommissioning, and it appears that is going to be a bigger topic now, if this is part of the CapEx figure, and whether that big tower of CapEx is in any way related to owned platforms, BOT, and I mean, how you're going to proceed in that regard. Thank you.
Okay, so on the cost saving, one way of tracking would be looking at in the G&A line. Definitely you will see maybe the corporate reduction will be, you will see on that line. Other way of looking at that, you will have to be tracking the operational performance indicators like lifting costs, definitely the cost on the refining area, because those will be efficiencies that we will gain. And the $2 billion that we mentioned, they are in the 2 year, so we are still getting, what we will do in the EVA actually, we will go deeper into indicators that we will have to, how can I say, to keep track on the operations even more than those that usually we release to the market, to see where we have even other opportunities, because we do have more opportunities. But this is a starting point because we want really to get an important goal and a goal in the next 2 years. I think that's the point. I'll pass to.
Well, regarding the production, we have included the unitization or the TOR surplus in our profile, and we have included in the start at the year 2021. We have made a deal with the CNDOC and the CNOOC companies that we want to close the deal or to sign the co-participation agreement until December 2020. So starting the 2021, we would suffer the effect of the TOR unitization, which means something like 10% of our production. We have already considered it in our profile. For the commissioning, you have asked if we have included the capex of $6 billion in the figures that we have shown, and that's yes, we have already included that. And about the platform, it's something that we have to evaluate. In our plan, we have considered that we would have platforms that we are going to construct then for the TOR, but we are still in the phase 1 of the project for the TOR. And the next year, the beginning of next year, we are going to decide on our board what will be the kind of platform that we are going to use. And regarding if they are being the BOT or platforms that we are going to construct, they will be our own, or if they are going to be leased, that's something that we evaluate case by case. But in our plan, we really have considered that will be constructed. We don't know yet. Maybe we will not spend that amount of capex in our 5-year plan, but we wanted to be more conservative. And then I don't know if you have noticed that at the year 2024, we have included the first platform for the TOR surplus, which will be the Búzios 6. And so that's why we have included also the investment associated with this platform.
Hello. Pedro Medeiros from Citi. Okay, I would like to start as my colleagues did. Congratulations for the Petrobras team, the whole company, for the execution of the plan and for crafting the new plan. I have a lot of questions, but I'll try to keep it to 3 questions, okay? First one is following up to Regis's question on CapEx, okay? When we look back in the last 5 years, the company has been significantly exceeding its guidance in CapEx execution, right? So I just wanted to understand the 2020 and 2021 CapEx. What exactly is increasing in CapEx for us to see a bigger number, considering the amount of projects that were developed in the last 2 years relative to the amount of projects and the fact that the new platforms are being leased for 2020 and 2021. I understand that there should be contingencies, but I just wanted to try and get a level of how much upside potential we could see there in terms of contingencies. My second question is linked to the details disclosed on the Campos Basin. So thank you so much for posting a guidance on production from Campos Basin in the coming 5 years. But it seems that the figures implicitly assume a much bigger depletion rate than what the guidance has been. And that could be in part linked to abandoning some of the platforms. But if you could give more details on what the assumptions are for the Campos Basin depletion rate, because it seems that they're, like doing a rough math here, that they're actually closer to 14%, at least on a guidance basis already, excluding the green turtle divestment. And my last question is, I see you have added a new project, Lula RF, and I suppose that's related to the replicant vessel that never came through, but if you could give more details and whether the Mero field, you think that could still accommodate a 4th unit or not. Okay, thank you.
I will start with the CapEx and then Carlos Alberto can mention as well. Thanks for the questions first. So if you look at the CapEx of the last 5-year plan, it was around $84 billion, and now we are going to around 76. And if you look like, if you divide that over the years, you would reach around $15 billion. So one piece of the reduction of the CapEx from 84 to 76 is applying the risk management to really give you a better guidance for the number. So I would say that this number might be around $12 to $13 billion that we reduced just due to the application of that tool. The remaining is an increase due to transfer right surplus that was not in that number last year. So it is a reduction, even including the transfer right surplus. So that's the point I wanted to make. So I don't see as a number that it's outreach. We believe it's really a real CapEx number that we are going to execute. But I will transfer to Carlos Alberto if he wants to give any remarks on that.
Just to complement on the years 2020 and 2021, regarding the CapEx, we are going to put on stream the P70, which is the Atapu, and also the Mero 1 and Sepia, but also some wells that we are going to put on stream, and that has to do with the platforms of Marlin Leste, Marlin Sul, and has to do with the renovation of the Campos Basin. But we also have to remember that if we look at the figure of the CapEx of the E&P, we see that we are going to spend almost $12 billion in exploration. So we have a lot of wells to do in exploration next year and the years to come. Just next year, we are going to drill 8 exploratory wells at the pre-salt. So that's the reason to increase also the CapEx at the year 2021, 2022. We have a lot of exploration to do, and it has to do with the bids that we have to take part in at the years 2017 and on. At the Campos Basin, the depletion is really at the 14%. We have had this depletion at the year 2019. We are going to have the same depletion that in the 2020. And the depletion is something that has to do with the number of wells that we are able to put on stream or not. And so, as we are suffering from the fact that we still don't have our platforms at the Campos Basin that are already concluded in the requirements of the IBAMA, our regulatory agents for environment, as we have to complete the work there, we will not be able to put more wells on stream unless we finish them. And so at the year 2020, we will have the same reduction on the same decline on the production of Campos Basin. But then, at the year 2021, we will have more wells at Marlin Leste, Barracuda, Marlin Sul, which are the fields where we are adapting the platforms. And also some new systems will go on stream and after 2022-23, which will be the Marlin and also the integrado Parque das Baleias. So the production we are going to increase based on the wells that are going to be put on stream on the older systems and also new systems. And for the Lula FR, it's a system that we consider the use of the P71 on this field, but that's something that we're still analyzing. Maybe we are going to put those wells directly to the platforms. We are still analyzing, but we decided to consider it in our plan because it will be more conservative to consider the capex or the necessary investment that I have to do and associated with the connection of the wells to this platform. But we still need to do our work inside and see if we really need a new platform there or if we are going to put the wells directly on the platforms that we have. But it will be, they are wells at the Lula Oeste area, and the reason for that is to increase the recovery factor. That's why we are calling it the Lula FR. That's what we have included in the plan. So that there is investment for that, but we still don't know if we are going to use the P71 or not. Mero 4. What about Mero 4? Yes, we are evaluating the Mero 4. We saw that there was a reduction on the potential of that part of the field, but we are evaluating and we think that we are going to implement the Mero 4.
Thank you. Paul Sankey at Mizuho. I represent U.S. investors. A question, please. What do you perceive the major concerns are of U.S. investors, and how do you feel that today's presentation addressed those? Thank you.
I do not see, I have frequent contacts and meetings with U.S. investors. At the moment, I do not see any major concern from the U.S. investors. I believe that they are very confident on our company. So as long as we keep doing the right thing and we are convinced that we are doing the right thing, we have no fear. That's the point. So I believe that not only the West investors, but investors at all have a concern have a demand for more transparency, and we are developing initiatives like this one, giving more details, opening our numbers, our costs, and avoiding overestimating our projections, not over-promising and under-delivering to gain the confidence of you. And the response, as I mentioned in my first talk, was very good, at least for this year. The market votes with price, and you have priced Petrobras shares very good, in a very good way. so our share price outperformed the shares of all our peers. So we feel very happy and confident.
Okay, maybe one question that we have been hearing for some time is when dividends will be higher. So that's why we created a dividend pause. So this is something that if we compare ourselves to our peers, maybe investors see that they are paying much more than we do. They understand we are doing what it needs to be done, that is to deleverage, but we create a dividend pause to give the light in the end of the tunnel. So that's one point.
Regarding dividends, it was another initiative to increase transparency. Investors now, they know the rules for dividend payment. So that's one question that we have addressed, one concern that we have addressed as a general, it was a general concern because it's the law. Unfortunately, Brazil is one of the few countries in the world that has a law obliging companies to pay a minimum dividend based on accounting profits. We have to comply with the law, but in addition to that, it was Andrea's initiative to set a rule to pay dividends. Very clear one.
Thank you. It's Lily from HSBC. Thank you for the presentation. It was actually very comprehensive. I have two questions, more top-down. One is about the tax regime in Brazil for the oil awards. So would you anticipate potential changes to more of a concession tax regime and less of a production sharing agreement? And would you think that from your Petrobras standpoint, it would be worth it for a farm down either on the transfer rights or production sharing agreement assets, and if Congress in Brazil is ready for that, right? That's one question. The second question is more on your divestment plan. I also had a feeling that the $20–30 billion was a little bit shy of my own expectations because the whole plan does include refineries, midstream, gas, power plants, and it looks like this might be less than replacement costs. So my question is more about what kind of EBITDA or returns of such assets that are set for sale do you have today, and how you see the potential new buyers of such assets doing better than Petrobras? Thank you.
I always criticized the regimes for exploration of oil in Brazil. It's very complex. We have three regimes: concession, transfer rights, and production sharing contracts. This issue is being discussed by some authorities. It's not in our reach to change the policy. We are just a company, we are not government. We are strongly in favor of one regime, the concession regime. We deem that's very complex and it favors government intervention in economic activity. So let's keep it simple and go just with the concession regime. I've been arguing for this since a long time ago. I have been criticizing the government for too much intervention. And now I realize that the authorities, the government authorities are concerned with this complexity, and I expect them to promote changes during 2020.
Concerning the divestment plan, you write that it includes the refinery sale and our 10% in gas transportation and distribution company, but we have to evaluate that considering that the most prolific ones, like NTS and TAG, were already sold. Now we have 10% of these two. And concerning the refineries, of course, in our divestment plan, we have some refineries that have very good free cash flow, but others not. So, in average, we expected that the potential buyers will pay a multiple of EBITDA that is like what we have today with Petrobras. So it does not too high in comparison what we get in Petrobras today. And we are keeping the most prolific refineries in our park, the southeast, especially in São Paulo refineries, that are the best ones, will be kept in our plan. And the gas distribution plant, as you know, we have still half of the company because we sold to Mitsui, 49%. And what we present in our plan, that we say the sales between 20 to 30, it considers our best estimation, internal estimation. But of course, it depends on the appetite of the potential buyers, right? On the return of the market. We are very excited about that, especially for the refineries. We received the good offers, non-binding offers for the first 4 refineries. It means that it will be can be a very competitive process. And in our 5-year plan, our free cash flow that Andrea showed already considers that we have divested the whole 8 refineries, the gas transportation, distribution company. They are not included in the free cash flow that was presented in the plan. Of course, they are included in the years 2020, 2021, but from 2022 on, they're already out of our plan.
Hi, Ross Lebetkin from Welligence. I had a quick question on the visibility of the upstream divestments. I think the midstream and refining is a little bit more clear after the presentation, but in 2019 with this management team in Q2 and Q3, I think you were highly successful with Tartaruga Verde, Pampa and Chova, Pargo, and a few others. We naturally expected that with the TOR and PSC round 6 coming up, that it would slow down a little bit in Q4. Now with that behind us, I know Garupa is still open, perhaps slightly delayed, but will we expect a new wave of upstream divestments in the next, call it 60 to 90 days? And obviously we have ideas of assets that we think could be Golfinho, Papa-Terra, Marlim you mentioned earlier, but any visibility on that would be helpful because we view these as NPV negative assets. If you look at low utilization rates of the platforms, high abandonment, contracts expiring in 2024, so minimal activity, but you've managed to get very, very competitive bidding processes and very attractive offers. So curious about the visibility of those returning.
Well, I believe that until the end of next year, you're going to see a continuous flow of divestitures in the upstream, mature fields, onshore, and in shallow waters. Every week, we are launching news or flyers or the announcement of receiving of binding offers or non-binding offers. There's a continual. We have dozens of fields still for sale. These are small, but in total, they represent some billions of dollars. And you have these big fish like marlin that for just one chunk of it will carry 2 or 3 or even $4 billion.
And just to add, as Andrea mentioned, we have this target. We have the same goal to reduce our debt in the year run, in the short run. And so the intention is to see if we do not succeed reselling the assets that we have been having such success in the past. If we feel that we need to add more assets, we are going to do that. And at the same time, we will choose the assets where we will need to put more capex. And so she mentioned the Marlin field. We have other fields as well, and the campus base, the PETR, for instance, is one that we are not thinking about putting more investments on this field, but at the same time, we think that there are a possibility that we could sell it also. So there are some fields, there are collection fields that we're evaluating them, and every week we have this exercise internally, an evaluation that we made in our internal governance, and where we see what will be next fields that could be put to divest in the campus basin. But for sure, the Marlin, the Búzios field is also very important. We don't want to sell it, and we will not sell it. We have bought it by the minimum profit oil, so we can imagine what is, when you compare it, although it's a production sharing contract, when we compare it to a concession contract, based on the fact that we bought it by the minimum profit oil, it's something very competitive in terms of the results.
Well, we have room for just one more question, one final question.
You combine this into...
Yeah. Thank you. Frank McGann, Bank of America. Just 2 questions quickly. One is the composition of production changes quite a bit in terms of percentages over the plan period because of the rise in the production sharing agreement production. You do still have fairly substantial transfer of rights, although the actual percentage comes down. Just thoughts on how the per barrel profitability changes as a result of moving forward. Is there any material change as we go through the plan period? And then the second question is related to the slide that Andrea showed, and perhaps this was just for illustration, but the morale range you used there was 350 to 410, I believe, and I was just wondering why you chose that range, if it was just to illustrate, and or if that's your actual forecast amounts.
Well, regarding the production sharing, it has all to do with the minimum profit oil the profit oil that you have offered when the bid has happened. And on the Libra, what we have made inside was to have a project that we call the Libra 35 that would be just to implement projects that would pass if the oil price, the Brent, would be at the $35 per barrel. So they are very competitive, in fact. And when we look at Búzios, for instance, which is for sure our best asset that we have today, as we have bought it by the minimum profit oil, which is around 23% of profit oil, so it's very competitive as well. So we are thinking that this project will also have a very good profitability, because not only based on the economics of the field, but also based on the fact that it has a lot of potential. So it will generate a lot of cash for the company in the future, for sure. Although it's a production sharing contract, because it has all to do with the profit oil that you offer when you make your bid, and they were very good offers on the perspective when we bought it.
The range I showed was the range that we are living right now, that is around $60 per barrel, and 4.2. I did a new one, but it's somehow $35 billion EBITDA, if we are around 4.2 on the exchange rate. That's what I mentioned. Roberto, if you want to.
Well, thank you very much. Unfortunately, we have no more time for questions. We run out of time. We have now a press conference, and after that, we are flying to London, so we have to run. Thank you.